that. I'm selling the equivalent of about 4 tankers on the opening. You've heard nothing else on OPEC?
No.
I got you.
Thank you, Paul.
Yeah. What do you think of it, JJ? Is this a spot to nail it? I'd rather sell it down, though, than sell it
Betting
here.
that the agreement won't hold, Paul is selling oil futures as fast as he can, hoping that the other traders won't see what he's up to. Speed is everything.
Is 40 bid and a half? Offer 1,000. Offer 1,500 at 40. Offer 1,500 and a half. Show the size. Ask him how much he sold. Give me a number. Tell him more behind it. Do it. Do it. Do it. There's more behind it.
More behind it.
I can feel it. They're gonna get it. I'm gonna get it. Iraq just said something. What does Iraq say? That's great. That's great. They have an agreement between 13 people, but 2 of them said they won't agree, which happened to be 2 of the 5 biggest producers in the world. That was tough to figure out, wasn't it?
Paul is on the phone to an oil trader who's saying somebody's been selling a lot of oil, but he doesn't know who.
That was my buddy at probably, again, the second or third largest crude trading firm. And his guys went, man, these guys, they sold the hell out of it. And the people that he worked with don't know that it was, which is great. That's even better. I hope they think it's some wild as shit Arab who knows the whole agreement's getting ready to fall apart.
Even though Paul trades in every kind of commodity, his specialty is stock index futures, which are traded in pits at various commodity exchanges like the Chicago Mercantile Exchange, the MERC, or the New York Futures Exchange, the KNIFE. These people are betting not on a company or an industry, but on the future direction of the entire economy. And this week, just before Thanksgiving, 1986, the big news is not good. The Iran-Contra affair has just broken, the insider trading scandal is heating up, and the market has been going nowhere.
85.90.
Okay.
To the fast market, 85.90. There's nothing here.
In spite of the bad news, Paul and Peter are convinced that at any moment the market is going to soar.
With a half an hour to go, because not only will we be selling, so will everybody else in the street. Which means I want to get Paul. Paul.
Yeah,
Do it again. Another 300. Sell them. 3 minutes. 3 minutes.
Paul has bet a lot of money that the market is about to go up, but nothing is happening. If he's bet wrong, he's in trouble.
The market goes down so much more faster than it goes up. It's incredible, right? It can take out 2 weeks of work in 3 hours. In fact, it took out 6 months of work in 1 day in September.
We're going to get a big move one way or the other. And it's just right now trying to gauge which way that move's going to be. Everyone right now has to be negative walking in the morning, looking at the newspaper, looking at the fact that the bonds are down, and yet this thing is maintaining an enormous premium to spot. All that stuff is sitting there looking at us every morning in the headlines, and yet the market won't go down. It's telling a different story than the headlines are. What is happening again is that the market continues to build energy, and every time you see these incredibly sharp downturns, all that's doing is, or to me, all that is a signal of the fact that people are absolutely skeptical, negative, and to a certain extent frightened through here, and yet the market won't break. It is screaming to me that it wants to go higher.
At times like this, what gives these two confidence is a theory that says the stock market moves in cycles, in patterns. And Paul and Peter subscribe to the Elliott wave theory, which says to them that what happened 49 years ago, in the late 1920s, is happening again, now.
If the market is a reflection of people's behavior and people behave similarly in similar circumstances, then history of market prices may give us an indication of what may happen in the near future. Well, the last great bull market really was the 1920s. And we looked back and did a statistical analysis on the 1920s through today, punching in literally thousands of Dow high-low and closes to run correlations between what happened in 1925 to 1928 to what happened between 1982 and where we were in 1986. Well, that correlation turned out to be over 90%. In fact, since I've run that correlation, the correlation has gone up from about 90.7% to close to 92.2%. And as you
Which
can
one
see,
is the 20s?
the 20s is the blue, and the red is the 80s.
So what day back in the 20s are we at right now, approximately?
We're like in early August 1928.
And so let's see, if my memory serves me correctly, and we've got another 40% in the down the upside.
Correct.
So we're talking
And
about
about another year, a little over a year, up moving the Dow.
and then it looks like there might be some storm clouds in the horizon.
To say the least.
The correlations here are phenomenal. That's incredible. What are the chances of taking any 2 5-year period in the stock market and getting that kind of correlation? What would you guesstimate off the top of your head?
I mean, it's got to be astronomical. You're talking 1,000 observations. I don't know, 1 in 1,000. It's really pretty scary. You know, if it looks like a duck and it acts like a duck and it sounds like a duck, it's probably not a chicken. And that's what's scaring me about the activity in the stock market right now.
Some analysts disagree, but Paul Jones and Peter Burish are among those who think there's a crash coming, and a big one.
You're probably talking about something with incredible fireworks, with unbelievable and unprecedented volatility, and with moves that will leave people gasping. It's going to be total rock and roll.
The market should continue to rally into the first quarter of 1988. A rough projection would be somewhere around 3,200 on the Dow. And then in March, April of 1988, there's weakness, and at some point shortly thereafter, and if you're going to hold me to a date, let's say the end of March 1988, the market then drops sharply and retraces, 50% of this bull move from 770 to 3,200 in a matter of a couple of months.
The last guy that buys a share of stock when the Dow's at 3,000 or whatever number it is, he's buying it because of the fact he thinks it's going to 6,000, because it's been reinforced in his mind over the past however number of months, years, or decades that the stocks can't go down.
In one sentence, buy low and sell high. That means buying now, riding it out till the market goes to about 31, 3,200. Don't wait for top tick. That's 1988. Severe drop, a little rebound. By 1991, the market is going to be under 500 on the Dow.
The debt gets to the bottom of the accumulation, and then the repayment of debt basically drives every economic cycle that there is. And right now, we have probably explored the envelope with regard to mortgaging our future earnings. The next part of this cycle will be the repayment of what we've enjoyed now for the past 4 or 5 years. I mean, again, we're in the largest post-war business expansion cycle in history.
I'm concerned. And knock on wood, if we're successful here and the play comes about and we make a lot of money, I want to go work for the Treasury or work for the State Department or work for the Fed to help out of what I consider will be dire economic consequences.
Paul spends weekends at his farm in Virginia overlooking Chesapeake Bay. It is early Sunday evening, but the only markets open at this hour are in New Zealand and soon in Hong Kong. So he gets on the speakerphone with some brokers and starts to trade currencies.
Contracts you can give me a dealing quote on.
The biggest number.
At any hour, any day of the week, someone is trading money. And the price of the dollar is never still. It jumps and falls in little ticks every half minute or so. At this hour, most of the players are Japanese, Chinese, and Australian.
What kind of size can you give me right now? Can you do me 1,100?
1,100?
Yeah.
1,100 contracts?
Yeah, $60 million. Can you do 60 million?
No, that's 135 million D-mark.
That's a bundle, isn't it?
Yeah, you better. That's about $67. That's about $70. Yeah.
Okay, well, let's do it.
Hey, hold on a second.
What a nice way for them to begin their morning.
1,080 contracts.
I hope they never see daylight on them.
Okay, that's 135.